About that. I tried to do the daily financial news from my computer. I tried to upgrade the sound and the video, and I was told it was a little choppy. So instead of fighting that battle, I wanted to make sure I came and brought you the daily financial news as close to 7:30 as I could. It will be interesting what I decide to do at 8 o'clock because we are doing a live Q&A. Again, what it would be 26 minutes from now, I'm going to do a live Q&A. I do those from my computer. I'm not sure if I should do it with the new 4K camera, if the streaming is too big for my home Wi-Fi. Perhaps that is what is going on. I don't know. All these things, you go out and spend money to get better quality and frustrating. But anyways, the daily financial news is brought to you because I evaluate what's going on. We talk about it every day. And what we are trying to do here is help you understand what is going on in the market. We are not trying to feed the YouTube algorithm. We are trying to bring you value. And again, these daily financial videos are sponsored or inspired by Gary Vee and Nipsey Hussle. They basically had a conversation well over a year ago and said, hey, why can't you do this every day? So I've been looking at the financial markets for 20 years, and now I look at them for 90 minutes, thereabout, and I bring you what is going on. So if you want to know about money, investing, all of that, do me a favor, give me a thumbs up, little bit of good mojo for what I do in the morning. Hit subscribe and notifications so you can be a part of the journey. 7:30 every day, usually 6 days a week, because I also do these great expert series, and sometimes we need to do the daily financial news around that. Anyways, on to the news of the day. First and foremost, I don't know if you have started to see this, but I have been watching because, again, what do I look at as what do I look at? I look at cost of capital in the consumer. Consumer is one that we look at a lot because it's easier to follow. But when cost of capital kind of wakes up, we need to pay attention. And it's early, but the rates on bonds are rising. So we need to watch that and look for that. So first and foremost, what we are looking at is the 10-year note up to 0.84. It's approaching its 200-day moving average. What this really says is the bond market sees growth or expansion ahead. Now, we shall see, right? But basically what the bond market is telling us is, hey, we will eventually get stimulus. We will have probably an infrastructure bill. But the bigger issue, again, cost of capital is, does inflation get ahead of us? It's going to be amazing. Probably by February, March, April of next year, less than 6 months away, we are going to start seeing talking heads on TV talk about inflation. Get ready for them to talk about inflation. Get ready for them to dismiss it. The Fed can talk all it wants about keeping rates low for year after year after year, but they are not in charge. The bond vigilantes, if they see inflation out there, rates will rise and the Fed will have to battle that. So we shall see. It's early. It's hard to say that 0.84, for a 10-year is up, but it is, right? I think the low print was 0.56. So on a percentage basis, it's up pretty substantially. In addition to that, what we've seen the last 6 to 7 months is a pretty flat yield curve, right? Which meant short-term and long-term money, generally speaking, was seen as similar risk profile in payments. But the 5 to 30-year spread is as steep as it has been in the last 4 years and expanding. These, again, are signs of inflation lurking in growth out there. So it's something we have to pay attention to. It's probably not immediate, but it's a lot sooner, a lot closer than the Fed would like. Next up, I don't know if you are a Tab drinker. I just saw the other day that Coke is actually canceling 200 drink brands, and Tab was frankly the only one that I recognized. That's a lot of brands. I'm guessing Coke bought a lot of companies over the years, wanted to control that shelf space at the grocery store, but now trying to control costs. They're canceling 200 brands. So anybody out there ever drink a Tab? I'm not even sure if I've seen Tab in a while. It was one of the first diet drinks way back when. Probably older than some of you have been alive, but yeah, Tab was a drink, 30 years ago, 40 years ago. It's crazy. Next up, We are starting to see in the stock market what is called the reflation trade. Really, what this means is it sort of ties in with the yield conversation we had just a moment ago. What we are seeing in the reflation trade is people really moving away from the tech names who have got long in the tooth. Think Amazon, Apple, Tesla, Zoom. The reflation trade is okay. The U.S. is going to start opening up. As Jim Cramer talks about the 4-lane highway, it's going to start to have that 4th lane move, which is going to allow us to do more and more think growth, things of that nature. So people will be exiting out of these high-flying tech stocks at 50 and 100 times sales and moving into other types of company. If you believe in the reflation trade, if you believe we are not going on another lockdown, that is stuff that is coming. Once again, talking about Mattel. As a parent, I remember buying these my daughter buying Mattel Barbies way back when. It looks like one of the surprise winners of the lockdown is Mattel. I mentioned it yesterday in passing just because it kind of brought back memories. But reading Mattel After Hours yesterday, it looks like this health crisis has quadrupled, 4 times, quadrupled Mattel's profit, which I thought was amazing, right? If you compare Mattel's profit the quarter before the health crisis with the one that they just reported, they made 4x profit. So damn, Barbies are flying off the shelf. And it really goes to show that parents are doing whatever they can to keep kids busy and get them off those screens, which is definitely something I could appreciate. But I never expected Mattel, of all things, to be a health crisis stock. But, people are staying home. People need to play with toys, I guess, to move time forward. So pretty interesting stuff. Question about Tesla. I keep reading different, Tesla is one of those stocks where you either love it or hate it. I don't really care. I just share the news that I read. But the thing that I read is interesting is the last 4 or 5 quarters, Tesla has operationally not turned a profit on making cars. Some of that's because they're investing big time in plants and things of that nature. But when they report their earnings, right, the bottom line, they are profitable. And it really comes from selling these green credits they earn to other auto manufacturers. That all falls to the bottom line as profit. So, I see some people saying, Tesla is a great car manufacturer that loses every money on the car. Others saying, no, you idiot. Green credits is part of the deal. They are doing what they're supposed to do, and thus they are profitable. So, I don't know. Some people call it dirty earnings, and others are like, no, that's the price of the game. Again, I don't have opinion. I'm in the Silicon Valley, and I see Teslas everywhere. I bet you there might be 40 Teslas within 200 yards of me. Maybe 500 yards of me. They're everywhere in the Silicon Valley. Next up, I don't know if you saw this, but I had a rather nasty comment here in the last week or so. Somebody accused landlords and myself of being cancer, right? They basically said landlords are greedy, you're cancer, you're this, you're that. I took the time to create a video on it and actually shared the entire comment with my thoughts. But I did find this article interesting because, again, what really that, commenter, I guess you would call it, was getting at was home ownership is out of reach. Well, according to the article I read, again, you do not need 20% down. That was an error in his judgment. You can get into a house for as little as 3.5%. And according to this article, the average person could save that in $300 a paycheck for 26 weeks and afford the average home. Again, you don't need tens and twenties and $30,000, at least in most parts of the country. You can get in for 3.5% down. You need to live below your means. You need to sacrifice. You need to make it a choice. You need to maybe get a second job. So stop blaming others and get off your butt. To call me a cancer was hurtful, right? That's nothing we try to do here. I share what's going on. I try to help people. And that was not a very good comment, but we shared it with you. Hopefully we move forward. I appreciate all of you responding to it, sharing your thoughts. That particular video, I think, has 120 some odd comments, many of them coming from my subscribers. So thank you for watching and having my back. Finally, we have a monster week ahead, both on an earnings and an economic data. We'll just go through the days and just talk about it. It is going to be probably the most active week of the quarter. There's always one. I think we're about to enter it. First off, we got Monday, new home sales. As you recall, pending home sales were blockbuster last week. We get new home sales Monday, I think Monday before the open. So that will be interesting. Tuesday, we get Microsoft and Caterpillar earnings. Then we get the S&P Case-Shiller Index. Again, very interesting to watch that. One of the things from the Case-Shiller Index I think is going to be interesting is it is not configured for the market we have today. The Case-Shiller Index is interesting. It is more data for us, but it is configured and focused on major metros. And if you know anything about what we're talking about here, it's not the metros that are winning, it's the suburbs. And I don't believe the Case-Shiller Index, because it's either a 10-city index or a 20-city index, will really capture what's going on. But we shall see. I actually expect Case-Shiller to be, up 5-6%. But when you add in the suburbs, as we saw last week, it's up 15. So I believe at some point somebody needs to call Case-Shiller irrelevant because it was configured for yesterday's real estate market, not today's. So we'll see if anybody catches that. Wednesday, we got Boeing, MasterCard, Ford, Blackstone, and eBay. Lots of stuff going on there, consumer-oriented, both MasterCard, Ford, eBay, Blackstone, see what's going on in the hedge fund industry. So lots of important stuff. Thursday, if you were to pick one day every quarter, Thursday's the day. Thursday this week is going to be interesting. We got after the bell, get this, after the bell, after the close, we got Apple, Facebook, Alphabet, which is Google, Amazon, and Twitter. Wow, that is going to be a busy afternoon. Figure 1:30 to like 2:30 Pacific is going to be a fun time reading what's going on. In addition to Thursday, we have, of course, unemployment claims, which again last week was basically data cleanup, lowered the previous week from 898 to 840, and then came in sub 800. So that was really good news. We'll see if the trend continues lower, which would be really good news. We have pending home sales, which will be interesting. And the mother of all GDP numbers will be shared for the first time, Q3 GDP. Q3 GDP is going to be a monster. It will likely be over 30%. Just get ready for the big headlines. Get ready for the tweets about rocket ship growth and all of these other things. It is going to garner a lot of headlines. And then finally, we also have pending home sales on Thursday. And then finally, the big number, we have another number important for the week is personal income and spending. This would be an interesting one to see what's going on with the consumer at the daily level. So this is what I got for you. I do have an interview that goes live at 11 o'clock a.m. Pacific. I recorded it late yesterday. So instead of putting it out late, I decided to schedule it for 11. We are going to do the 8 a.m. live Q&A. I'm a little nervous about doing it on my computer. I'm thinking the 4K camera is consuming so much bandwidth, it's making it choppy. But I don't know. I don't know what to do. So I have to figure that out. I got 10 minutes, a little bit of stress. All right, everybody, take care of yourself. If you like these videos, give me a thumbs up. Hit subscribe. We talk about daily financial news every day. We don't do silly videos to feed the YouTube algorithm. Take care of yourself. Bye-bye.